All right, so Cathie Wood sees deflation returning, boasting innovation stocks and Bitcoin. Of course, because Bitcoin is just a part of the subject matter of everything now. The founder and CEO of ARK Investment Management said Thursday that she's not worried about the threat of inflation that is haunting so many on Wall Street. Instead, the fund manager expects deflation amid a breakdown in commodity prices, gridlock on tax policy in Washington, and innovation trends taking off. So we're going to have to see where this goes. Honestly, if you wanted my opinion, I truly believe that we could see this weird scenario where we have both inflation and deflation taking place at the exact same time. And from there, we'll just have to see what's going to be the strongest player. She says, so I think what's going to happen here is businesses, which may be double and triple and quadruple ordering right now to try to get supplies, they're going to get those supplies as the market basket is shifting towards services, said Wood. I think commodity prices are going to have a significant fall into next year. Raw materials, agricultural products, and key industrial inputs have spiked this year as the world economy tries to ramp back up from the pandemic. However, some of that fever appears to have cracked with the prices of future contracts for lumber and corn dropping sharply. Now, we have seen this drop, but I would also like to mention that they could not, there is no way to keep the lumber prices as high as they were in certain commodities that are out there because we need these items to build homes. Now, it's already hard enough for so many people to be able to afford these homes, even with low interest rates. The price has to come down or these products won't be moved at all. I mean, honestly, if the lumber shortage and the price uptick had continued, same with copper, if we see that keep playing out, people won't be able to afford these homes, and something like commodity price could actually put a crack in the housing market. So she thinks, I think what will happen as their currencies come under pressure, this is other countries, it could even be your country, the velocity of their money will increase as more and more of their population shift into Bitcoin and other cryptocurrency assets. This is what Wood is saying. The popular fund manager said she wouldn't be surprised if some of these emerging market central banks start accumulating Bitcoin and other digital currencies. Now, I cannot remember what paper I was reading, but about a year or so ago, I was actually reading a paper out from one of the central banks. And, we also have Basel III coming up, so don't forget about that. But as I was reading this paper, a year or so ago with central banking, 10 to 13% of the assets that they are accumulating will likely be Bitcoin or other cryptocurrencies here in the near future. So I really need to go and find where I read that. It was directly from a central bank, and it was saying, on their books that 10 to 13% of it would be some form of crypto. So I find this to be somewhat interesting. We know that these central banks, heck, even normal banks, there's a lot of debt to pay off here. And gold and silver should be what everyone is funneling their money into, but we've got everyone hyped up on cryptocurrencies. And if you wanted to debate this, there is the debate that central banks, rich people, whomever, could end up buying these cryptos, really jacking up the price, and actually being able to pay off significant amounts of debt with these cryptocurrencies. Now, in theory, you could do the same thing with gold and silver. As long as there is a limited supply, it is scarce, and people continue to buy and jack up the price. Well, this does make it easy, especially if you are going to go through an inflationary scenario, to actually pay off some debts. So I would just like to get everybody's opinion on deflation. We're not there yet. We're not towards hyperinflation yet. We're not necessarily towards deflation yet. But I just have this feeling that we're going to get this really weird scenario where we really truly could see inflation and deflation at the same exact time. We'll just have to see how this stuff plays out. And what I'm talking about here is like used car prices right now are significantly high. I mean, historically high. It's not often that you could go and buy something, put thousands of miles on it and be able to sell it years later for a higher cost. That's just unrealistic, but it's happening right now. So what I'm saying here is there is the possibility, while some things like our food and maybe gas or, housing cost could be extremely expensive, I also wonder if at the same time, because the normal everyday person is going to be struggling for cash, if we could see forced deflation because someone has to sell off assets. They can no longer afford to have that car, maybe the four-wheeler, a tractor, whatever it is, maybe the home that they're in. They could have to file for bankruptcy and kind of be forced into these things. And depending on what kind of situation the banks are in as well, they can't hold on to those items, especially homes, for such a high cost. So just kind of let me know what you think about this. Do you think we're going to continue to head towards inflation, or is Cathie right about this one? Are we seeing deflation return? Let me know what you guys think, and I'll catch you in the next one. Bye-bye.